Hello, ladies and gentlemen. I'm hugely thankful of today's guest, James Thomson, manager of Rathbones Global Opportunities Fund, to talk about the immediate reaction to the US election. It's still ongoing. It's on my screen over there, and no one knows what's actually happening. Maybe I am searching the tea leaves because I've got my Trump 2020 t-shirt on. Who knows whether that's good fortune or not? But James, thanks hugely. Thanks for turning up today and hopefully giving us a little bit of insight to these carrying on. So first of all, for the benefit of the viewers, what's happened?
Yeah, I think we're all pretty shocked. We're pretty shocked at how poor the polls have been,
Yeah,
and our own predictions have been, and I think it really shows that we don't have our finger on the pulse of what the average American is thinking, because there really is no average American now.
absolutely.
Now I sound American, so you'd think I might have any sort of particular insight, but I'm actually not. I'm British, so. I did spend quite a lot of time in the U.S. going to school and university there, but that's about it. So I'm trying to be a sort of impartial observer in all of this. I suppose where I do have skin in the game is in the fund that I run. I have more than 60% of my fund in the U.S., and so political events can have a meaningful impact on the performance of the underlying portfolio. And so I think in the last few weeks, sort of in the lead up to the election, most investors really had changed their minds. They really had started to expect a Democratic landslide, and so did I. We thought there would be a Biden presidency and a Democratic Senate. Now we're looking at gridlock and a divided government. And really now the only question is just how jammed up it's going to be. But remember that gridlock is actually usually good for stock markets. And so we're seeing an unusual reaction that maybe people wouldn't have expected. People might have thought that this uncertain, contentious result would cause a severe drop in stock markets. And actually, it's having some different effects on different parts, different moving parts of the market. So I think we have to go with what investors originally thought, which was a Democratic landslide, which implied, higher corporate taxes, higher income taxes, and higher capital gains taxes. We were going to get a $3 trillion stimulus approved. And all of that was going to be the trigger that value investors have been waiting for years.
Yeah.
These are the most economically sensitive areas of the market. A lot of these are sort of zombie companies that really needed a bailout. Now that that's in doubt, I think investors could, and it looks like the early signs are there, they could return to those resilient, reliable, and continuing growth stocks that could start working again after a period of sell-off in the last few weeks.
Yeah.
So we're obviously still in the middle of this swamp, but we don't know the final result. But it's certainly not going the way that the pollsters and I predicted. But it doesn't necessarily mean that that's bad news for all parts of the stock market.
Yeah. I've noticed that the Nasdaq futures are pointing to a very positive open, about 250 basis points up. Do you think that's going to continue, or is this just an immediate knee-jerk reaction?
Well, I think probably the big move will be in this sort of initial snapback, because those areas have been underperforming over the last few weeks. I mean, if people thought a big capital gains tax increase was coming and a big corporate income tax increase was coming, and given those areas had outperformed so significantly in the previous years, a lot of professional investors were taking money off the table and really taking their profits in anticipation of the snapback in those beaten up value names. Now that we've kind of ripped up the script, and it is not the Democratic landslide, I think investors are actually coming back to mama, coming back to the growth stocks that actually can deliver in sort of a variety of economic environments. that don't look cheap, but at least that growth, that's the kind of growth that you can count on
Yeah.
over the next few years. So, long answer, but I think an initial sort of big snapback in some of those areas, and I hope there will be some continued follow through, but probably not to the same extent that you see as you get this sort of shock reaction.
Mhm. How do you think the stimulus package or the proposed stimulus package will actually affect if we're looking at a reduced level? Will the market react negatively to that, or is it just a case of, again, more bifurcation where certain aspects do, certain aspects don't really care?
Yeah, I think the jury's still out a little bit because we were so focused on the large stimulus package with a Democratic sweep. It now looks like we might get, instead of 3 trillion, maybe 1 or 1.5 trillion. So it still would provide a boost to the
Yeah.
economy, but perhaps not enough of a boost for some of those industries that really were struggling so deeply to recover from this crisis.
Mhm.
And so it probably leans to the strong getting stronger
Right.
in that sort of environment.
Mhm.
But I think a stimulus will come. It just won't be quite of the largesse that we would have had, and it won't benefit some of the areas that a lot of people were thinking. I mean, a lot of investors were piling into green stocks, solar stocks, those sorts of infrastructure beneficiaries that would have been kind of immediate beneficiaries of a Democratic landslide. And perhaps we're not surprised to see those stocks rattling off pretty sharply this morning ahead of the U.S. Open.
Yeah. Now, if it does come to pass and we do have a 4 more years of Trump without any kind of um, effects of having to, cater to the electorate because he's got another election in 4 years, we could be seeing the final evolution, Trump going into his final form and going all out. What do you, at this point in time? I know it's difficult, but bearing that in mind, what could we be expecting of the next 4 years for the market when he goes full Trump?
Yeah. Yes, it could be a sort of exaggerated version of himself,
Yeah,
sort of Trump on steroids.
absolutely.
The hair will get even bigger, and the ego will follow shortly behind.
Yeah,
So, I wouldn't expect a major change in the things that he believes in, but just a more exaggerated form of that, buoyed by the confidence of an election victory.
hmm,
Um, but I must say, I mean, had the betting markets have been moving around even this morning. I mean, when I was up at 4 or 5 a.m. this morning, it was looking at a Trump victory. Now the betting markets are saying Biden victory, but perhaps still a Republican-controlled Senate, and
yeah,
so it could be quite a good scenario for stock markets if you do get this gridlock between sort of divided executive and legislative branches.
hmm,
So I certainly I'm not writing off Biden's chances, and if I was forced to put a bet on right now, I would probably still say Biden is going to win the presidency. But the Senate race was the one that really changes the dynamic quite materially.
Well, we'll just have to keep on watching for the next few days. At least there'll be good telly. After all these issues that we have to go through, at least we've got some good telly that isn't focused on the pandemic, isn't focused on Brexit. It's focused on someone else's mess, which, again, thank heaven for small mercies. It's been great. Thanks very much, James. This has been, real last minute stuff. Really, really appreciate the time that you spent today. And yeah, I'm sure we'll catch up, and I'm sure we'll discuss the fallout in the future. Thanks once again. Cheers.
You're very, very kind to have me on. Thanks so much.